Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, another day of gains. I think it's a 7-day winning streak for the market now. In fact, the Nifty has clocked that 24,300 mark, and the Sensex as well has managed to reclaim that 80,000 level. Hands down, it was the IT pack that was driving gains on the index today. If you look at the top 10 gainers on the index,
Absolutely.
five of them are from the IT pack. 4% up move on the Nifty IT pack after a day-long breather, because day before yesterday as well, we saw buying coming in on IT stocks. But banks, they cooled off a bit, retreated from record highs, but the Nifty Bank Index did manage to clock that 56,000 mark at open. But since then, it has cooled off. In fact, ended around that 55,300 mark or thereabouts. Analysts do say that 56,000 is a crucial resistance zone to watch out for on the Nifty Bank Index. Aside of that, autos were also fairly upbeat today. 2% up move on the Nifty Auto Pack. IT I mentioned. Realty and Pharma, these are the other two pockets that did well. Banks and financials were on the back foot today. In terms of individual movers, then HCL Tech, 8% up move on the back of inline set of numbers. We'll talk about that in details. Aside of that, you have Tata Motors, Tech Mahindra, M&M, Infosys. These are some of the gainers. You also had Geo Financials, Hero Motocorp, that was among the laggards yesterday, managed to stage a turnaround. Tata Steel, ONGC, Bharti Airtel, these were among the other gainers. On the flip side, what didn't do well were some banking names. HDFC Bank, has snapped out of its winning streak. Among the top losers today, so was Kotak Mahindra Bank. Even SBI from the PSU banking pack was under some bit of selling pressure. Axis Bank as well. Other laggards included the likes of Grasim, Aisha Motors, ITC, HDFC Life, and JSW Steel. But Yatin, lots of reactions to results
Yes.
when it comes to broader markets. AU Small Finance, that stock was up somewhere around 8%.
Clearly, and we'll talk about that stock in detail. But clearly, one of the top gainers in the FNO space. So did Wari react to the earnings quite positive. Momentum there, 19% higher intraday, settled at 15% plus. Niva Bhopal, Latent View Technologies are the other stocks wherein we could see a 7-8% kind of move. What was not doing well is Jammu Kashmir Bank, and post the terror attacks which happened in Pahalgam, we had JNK Bank reacting adversely. Probably it impacts the businesses there, and probably the overall impact for JNK Bank sentimentally as well. That stock was down 10%. Aavas Financiers, Blue Star, JB Chemicals, all of these stocks quite weak in trade. But also what was weak in trade was Voltas as well as Havells. Both of these stocks, after soft commentary on the air conditioning segment done by Havells, since there was a slower progress on summers in the north markets, we could see some bit of profit taking in all of these stocks. However, Nandita, BSC,
Hmm.
that stock needs to mentioned at 52-week high, 3% higher for that stock.
Hmm.
UPL, Bharti Hexa, as well as SBFC are the other stocks which continue to make multi-year highs.
That's true, Yatin. And the mid cap index as well continues to
Yes,
outperform, right?
yes.
Another 1 to 1.5% kind of an uptick coming in on the mid cap index. Although the breadth was strong throughout the session, but towards the end, it kind of evened out
Yes.
between gainers and losers. But let's talk about the top movers then. HCL Tech deserves mention. And of course, 8% uptick on this stock after an inline set of numbers, inline to marginal miss kind of numbers. But in the current environment, these numbers are welcomed by the street, given the fact that the guidance that it has given is the best versus the
Mhm.
peers. Because Infosys gave a guidance of 0 to 3%. Wipro gave a minus 3.5 to minus 1.5%. But here, for FY26, the constant currency revenue guidance coming in from HCL Tech is 2 to 5%. Of course, that's it has managed to beat its peers when it comes to that. EBIT margin guidance was also maintained between 18 to 19%. That was largely in line with what the street was anticipating. The constant currency revenue growth declined 0.8% vis-a-vis expectations of 0.6%. So it was pretty much fair, so to say. Total contract value was also pretty much healthy, 2.9 billion dollars for the fourth quarter. If you look at the management commentary, it was largely the same, across the board. They are seeing clients turning cautious in the wake of the tariff turmoil. Uh, and clients are taking a wait and watch approach. In fact, there have been delays in start of new projects. Discretionary spending as well is being put in abeyance due to the uncertainty, and companies are fearing that there could be a hit in the manufacturing, especially auto and consumer sector like retail, logistics, etc. But cost optimization deals are on track, and the management of HCL Tech has also said that although there is a highly uncertain environment, but they will continue to look for opportunities, and they've also said that AI will be the next big opportunity going forward. But let's see what the street is really saying about the numbers. They are finding value after the kind of correction that the stock of HCL Tech has seen on a YTD basis, which is in excess of 23%. They are saying that there is a value emerging with attractive, dividend yields of 4.2% at current valuations. Of course, they've also mentioned that HCL Tech has reported its highest revenue growth in the large cap IT services space for 3 consecutive years. And given the kind of guidance they have given, it is expected to repeat the same in FY26 as well. Stock has been getting re-rated constantly, and going forward, Nuvama believes it could get further re-rated from here. On the other hand, you have Citi that has maintained a neutral call on the stock with a target price of 1,510 rupees. They've also noted that the quarter was decent in the context of the current environment, and if you compare it with the peer performance, deal TCV was strong. But the guidance according to Citi implies a 0% CAGR for across quarters over FY26. Aside of that, they have also tweaked their FY26 and FY27 EPS estimates by 2% each, and they've tweaked the valuation multiple, the P multiple, to 22x vis-a-vis 23x, given lower growth. Morgan Stanley as well has maintained an equal weight call, target price at 1600. And they say that going by the estimates organically, guidance would be approximately 1 to 4% YOY growth in the constant currency terms. But for HCL Tech in particular, you can say that it has been much better than what the
Mm.
larger peers have done,
Yes.
and the guidance has come as a balm, which is why I think all the other stocks in the sector also
Correct.
saw a good uptick.
Clearly, and Nandita, Infosys posed the numbers, saw uptake. HCL
Hmm.
Technologies obviously 8% intraday move coming in. This clearly shows that the IT index, which is already down 20% on an average, has seen some rebound because probably
Hmm.
the market has priced in the negatives. And as you mentioned correctly, that the guidance, which was probably better than peers, the margin profile, the CC growth, which was better than peers, clearly meant that HCL Tech will outperform other IT stocks. And yesterday we had some lag in IT stocks. Today we have some lag in banking stocks, but the overall index level momentum is strong. Talking about AU Small Finance Bank now, because that was one of the top FNO gainers. Intraday gained nearly 9-10% on the fact that now the MFI business as well as smaller ticket loans have seen an uptick and better asset quality and better recovery. The management does expect that the gradual recovery will now start instead of earlier cautious stance. In fact, Morgan Stanley is overweight on AU Small Finance Bank. They have put the target on the counter as 750 rupees per share. Now, despite the high interest rates and tight liquidity, we have seen AU Small Finance Bank deliver a return on assets of nearly 1.5%, which is commendable. Elevated stressed assets will now probably see some respite, given the fact that now management is confident that the asset quality should improve from here on. In fact, the MFI asset quality cycle is expected to improve, which not only lifted the shares of AU Small Finance Bank, but also various, peer companies. Now, Morgan Stanley says that they've maintained the overweight because it is one of the mid-sized banks which is now attractive on the valuation basis, and universal license is being reviewed by RBI, which could get anticipated approval in the calendar year 26.
All right, that's about AU Small up and about. I think in excess of 8%. Also, the return on asset, according to brokerages, is only expected to improve going forward. The other stock that was in focus from the mid cap end of the markets was Havells. Numbers were fairly okay,
Yes.
mixed, but it's a management commentary that drove the stock lower despite an okayish performance in the quarter gone by. In fact, let me just break down the numbers very quickly for a Havells. It's the cables and wires and Lloyd segments that led growth for the company. In fact, higher copper prices and robust room AC demand also aided growth in the quarter gone by. Revenue grew 20%. EBITDA margin was at 11.6%, slightly soft if you compare it with 11.7% growth, 11.7% margin in the same quarter last year, and profit also saw a double-digit growth. Performance across segments were rather mixed. As I mentioned, cable segment did well with the stable margins. Lloyd's exhibited strong revenue and margin expansion, but switchgear and lighting segments saw margin contraction. When you talk about the management commentary, they have said that the cable segment is witnessing a demand uptick, but the wire segment is witnessing challenges when it comes to the volume growth. And they have also mentioned that inflation pressures persist on overall consumer sentiment as well. As Yatin was pointing out, secondary sales of AC and fans have been weak in the March and in the month of March as well as April due to delayed summer in the north. And aside of that, they've also mentioned that the fourth quarter saw growth coming back to rural as well as semi-urban areas. And they've also said that demand trends are indicating more movement or more tilt towards premium products. Aside of that, they've also said that they will continue to make investments in the Lloyd brand to gain market share. And they have quelled any concerns with regards to supply chain, especially for compressors. They have also, alluded to competition, increasing
Mm.
competition in the sector, saying that newer brands will consolidate market share from unorganized to organized. Of course, there are competition concerns from Ultratech entering into the segment as well, but that's still some time away. We
Mm.
did see a knee-jerk reaction in stocks when this announcement was made, but the stocks have done pretty okay after
Right.
that. Aside of that, they've also mentioned that they're very hopeful on the cables and wires segment, fueled by residential demand, infra capex, as well as global opportunities. Very quickly, taking you through what the street verdict is. Morgan Stanley has overweight call target price at 1942 rupees. They've said that there has been an EBIT margin beat across segments, although they've noted the fact that switchgear and lighting cables have seen a decline in margins. Nomura, on the other hand, has a buy call. Target price is a little lower than Morgan Stanley here, 1873. And they said that they are expecting 15 to 16% revenue growth over FY26 to FY27, driven by demand in cables as well as ECD recovery. But they've also said that the valuations are looking attractive as the stock is trading at 44 times its FY27 EPS. But Jeffries believes that the valuations are expensive. At 60 times FY26 PE, the valuations are in fact 30% above 10-year historical average. So conflicting views coming here. Nomura believes valuations are attractive, and Jeffries is saying valuations are looking fairly expensive. And they have said that there is caution warranted due to the softness in the urban demand, which is yet to recover fully, and commodity volatility as well. Although they have a hold call, target price is at 1800 rupees per share. But CLSA,
Mm.
Yatin, outperform call here as well, 1915, that's the target. But they have reduced the target multiple to 55 times due to higher competitions in the space. Of course, how things pan out in terms of competition, only time will tell. But whether there's a solid recovery in demand going forward as we approach summer season, that will decide the future course of action for the
Yes.
stock.
And I spoke with Anil Rai,
Hmm.
the management of Havells, and he was of the view that the demand has remained soft for
Hmm.
air cooling products, fans, because of delayed summers in the north. And also, it is too premature to talk about how demand trends will shape up.
Hmm.
Obviously, he was confident that the Lloyd growth and margins would improve as operating leverage improves. But yes, on the demand front, I think there was no big clarity
Hmm.
for the street, and hence the stock was down almost 3% in trade.
That's true, Yatin. Well, on that note, of course, we've come to the end of our stock list. But just to say that global cues are fairly supportive and strong.
True.
All these days, we didn't have the support of global
Mm.
cues, but today we also had the support of global cues, which is why we saw a triple-digit move on the index. And let's see what Wall Street does, because there have been some comments coming in from Trump when he
Yes.
said he doesn't plan to fire the Fed chairperson, and he's also displayed some bit of softness when it comes to his
China.
stance
Yes.
on China. But in India, the mood is a bit somber after the Pahalgam,
Correct.
attacks, and how the government now, decides the course of
Mm.
action will be crucial to watch.
Absolutely. And we have our neighbor Pakistan, which is got their air force moving. They are keeping a continuous surveillance over the border,
Hmm.
anticipating some action from Indian side. A lot of speculation in the media, a lot of speculation, when it comes to defense experts as to how does India react to the situation wherein we have almost 24, 25 civilian deaths because of this terror attack.
Yes.
Obviously, our condolences to the family, but clearly, a lot of angst in the public and a lot
Hmm.
of angst with the ministers as well. I'm sure there would be some government action very, very soon when it comes to this terror attack.
Definitely, Yatin, and we'll of course see how the situation unfolds. Condolences to the family as well. But with that, completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.